Hello everyone, welcome back to my channel. In this video, we're going to be talking about whole life and term plan and which one you should consider. So to start, we are going to briefly explain what is a term plan and what is a whole life plan. I've made two separate videos regarding term plan and whole life plan. You can check them out in my channel. But the gist of it is that both term plan and whole life plans are protection plans. And the differences are that whole life plan has cash value. It lasts until you're 100 years old. It can provide high amount of coverage, but the downside is that it is very expensive. As for term plan, it provides high coverage, it is affordable, but unfortunately it has no cash value and it doesn't last forever. So there are a lot of people who are covered under whole life plan, and I think the primary reason is because whole life plan is marketed as an all-in-one policy, meaning that it provides high coverage and it also has cash value. That means if nothing happens to you, you sort of get your money back. And also, if you want to leave a legacy for your loved ones, you can use the whole life plan because it lasts until you're 100 years old. So with that said, it does sound quite compelling because you get to have three features, but you're only buying one policy, which is why I think it's so attractive for so many people. But maybe if you consider the alternative, then it will not sound so good anymore. So I'm going to introduce this concept to you called buy term and invest the rest. You may or may not have heard it before. Basically, the idea is that instead of using the money to buy a whole life plan, you instead buy a term plan which is going to cost you less and use the rest of the money and put it in an investment portfolio. Because a term plan doesn't have any cash value, so I think that most people think that it is like a waste of money if nothing happens to them, which is not, because the insurance company has already provided the coverage for you for that period of time. I've done a separate video, you can check it out over here. So in today's video, we're going to be comparing a whole life plan versus buying term and investing the rest. And we'll be doing it using a scenario analysis. Before we start, let us first list out some of the assumptions for this scenario analysis. Assumption number one is that the policyholder and the insured is a 30-year-old male. Assumption number two is that the death coverage for both the whole life plan and the term policy is $1 million. Assumption number three is that the whole life policy will have a 5 times multiplier from the base sum assured, meaning that the base sum assured is $200,000. So from 30 years old until 70 years old, the minimum protection amount will be $1 million, after which it will drop down to the base sum assured of $200,000 plus any non-guaranteed sum assured. Assumption number four is that both premium payment will be until the age of 70. Assumption number five is that we will invest the difference in premium into an index fund. So now that we have all our assumptions, let us look at the scenarios. The first scenario is if the insured dies at age 50. The second scenario is the insured dies at age 80. The third scenario is that if the insured wants to cash out its policies at age 50. And the last scenario is that the insured wants to cash out its policies at age 80. We can see from the first scenario that if the insured dies at age 50, both policies will pay out $1 million. However, the buy term and invest the rest strategy will have an additional payout because of the cash value in the investment portfolio. So in this scenario, I think the buy term invest the rest strategy is superior. The second scenario is if the insured dies at age 80, in which the term policy would have matured and therefore there will be no coverage anymore. So the payout will only be from the investment portfolio of the insured. However, for the whole life policy, the policy will pay $200,000 of the base sum insured plus any non-guaranteed sum insured. So in this scenario, it very much depends on the investment portfolio's performance. If the investment portfolio outperforms the whole life policy, then the buy term and invest the rest strategy will be a better one. But if the investment portfolio underperforms the whole life policy, then the whole life policy will be the better one. Next is the third scenario where the policyholder wants to cash out the policy at age 50. In this scenario, I feel that the buy term and invest the rest strategy has more flexibility because the policy owner can cash out his investment portfolio and still retains the $1 million coverage from his term policy. However, if he wants to withdraw the cash value from his whole life policy, he has to surrender the policy and terminates it. Therefore, he will not have any coverage anymore. So in this scenario, I think the buy term and invest the rest strategy is better because it gives the policyholder more flexibility and it doesn't affect the sum assured. And the last scenario is if the policyholder wants to cash out its policy at age 80, in which the deciding factor would be the investment performance of the investment portfolio or the whole life policy. So after we've looked at the different scenarios of buy term invest the rest versus a whole life plan, I feel that personally buying term and investing the rest is the better strategy for most people because it gives them high coverage and also the flexibility to cash out their investment portfolio if they need the money. I feel that each policy should serve its own purpose. Like for example, if you're looking for coverage, then you should get a policy that focuses on coverage. And if you want to grow your money, you should focus on policies that help you grow your money. Because if you buy a policy with multiple purposes, you might end up overpaying for things that you don't need. And sometimes there might be a better way of doing things. So with that said, is buying term and investing the rest the only strategy? No, of course not, because there are other considerations, like do you need to leave money for your loved ones? Because investment can be quite volatile, and if you need to leave a specific amount of money for your loved ones for them to take care of themselves, having an investment portfolio might not be the best idea because the price can fluctuate and they might have to sell it at a bad time. And also, another consideration is that are you able to stomach the volatility of the market? If you are not, then buying term and investing the rest might not be so suitable for you because it might affect the quality of your life. So the alternative could be you buy a term plan and buy another endowment plan because endowment plan is less volatile. Alright, we have come to the end of our video. Give me a thumbs up if you like the video and subscribe if you like the content. And let me know what you think about whole life versus buying term and investing the rest in the comment section below. Thank you very much for watching. I'll see you guys in the next video. Bye bye.